Good afternoon and welcome to the Marketplace. Coming up in this bulletin, President John Mahama engages his Japanese counterpart to help boost value addition to Ghana's cocoa beans.
Ghana has a strong relationship with Japan through several factors. The first being the fact that Dr. Noguchi arrived in Ghana 100 days ago. It's the 7th of May 2027.
Also, the Bank of Ghana directs commercial banks to halt all foreign currency payments to large companies not backed by deposit as it takes some drastic measures to contain recent pressures on the cedi. Also, Fitch Ratings estimates 6 banks operating in Ghana are unlikely to achieve capital compliance set by the Bank of Ghana. My name is Winston Kaki. Now let's bring you an update on how the Ghana cedi is performing against major global currencies. It's the Marketplace. Now to our first business story. President John Mahama has begun engagement with the Prime Minister of Japan aid in order to add value addition for cocoa in the country. Currently consumes about 70% of the country's bean export. But President John Mahama wants Japan now to partner the cocoa processing company for more processing locally. Now the president has begun speaking at the engagement in Japan.
Let me begin by thanking you for your warm hospitality since we arrived here in Yokohama. I think everything has been very well arranged. I still have several of my colleagues who I work with, and I'm looking forward to see them on Friday before I leave. I'll have a reunion with them. When I was president the first time I attended the TICAD of 2013 here in Yokohama, and then again in 2016 when it was held in Nairobi. And so it gives me an opportunity to continue the discussion on the relations between Ghana and Japan. As you rightly said, Ghana has a strong relationship with Japan through several factors. The first being the fact that Dr. Noguchi arrived in Ghana 100 days ago. It's the 7th of May 2027. Will also be 50 years since the first JOCB.
Meanwhile, government is set to invest more in the creatives and fintech to help deal with the youth unemployment in the country. The move is based on fresh findings by government about the impact of these sectors in job creation compared to other traditional areas. President John Mahama disclosed this during a panel discussion on investment and job creation in Japan.
The fintech space is growing at an astronomical rate in Africa, and is mainly driven by smart tech-savvy youth who have seen openings and are taking advantage of it. In all our countries, a change in the economic structure is happening. For instance, in Ghana, in 2015, the services sector overtook agriculture and industry and manufacturing to become the largest sector in our economy, and that's how it should be. And so For instance, if you take the fintechs, I met the fintech groups, and one of the interesting ones I found was an agri-tech company. And it was solving a problem that we've been struggling with as government for many years, how to extend credit and support to farmers in order that they can increase productivity. And so we had a shot in the dark approach, distributing fertilizers, distributing inputs, and so on and so forth. And you couldn't tell who exactly those inputs were going to and whether you were getting value for money for those inputs. I mean, these young people set up a fintech, they set up a platform, they gave mobile phones to farmers, they distributed to the agricultural inputs to the farmers based on their acreage and their need, and based on the fact that they had them on the platform, they could send credit to them by mobile money, and at the end of the farming season, go directly to the farmer and offtake the production. And that changed it completely. The farmers are able to get a credit score now. And so you can see who's credit worthy and who's not. And so it's changed the face of agriculture. It's changing the face of agriculture in our country. Apart from that, the creative sector and youth startups are adding jobs faster than the traditional sectors. And so if you take the creatives, renewable energy and those spaces, they add about 4 jobs before you can create 1 job in agriculture or manufacturing. And so investing in that sector means that we can absorb more of the myriad of young people who are coming out of school. If we decide to concentrate on manufacturing and industry, Africa needs to turn up about 12 to 15 million jobs a year. You cannot create that in manufacturing and industry and agriculture alone, but the rate at which the creatives and digital space add jobs is much faster than the traditional economy. So,
now, moving away from the president, the Bank of Ghana has directed commercial banks to immediately stop payment of foreign currency to large companies not backed by deposits. Now, let's get more details on this statement from the Bank of Ghana, which I'm bringing to you right now on your screens. Now, the Bank of Ghana has observed with concern the growing practice of foreign currency cash withdrawals by large corporate, example, the bulk oil distribution companies, mining companies, and other similar actors that are not directly funded by prior FCY cash deposits. This practice exerts avoidable pressure on the foreign exchange market and undermines efforts to ensure stability. Accordingly, with immediate effect, all banks are directed to discontinue the payment of FCY cash to large corporates unless such transactions are fully supported by equivalent FCY cash deposit lodged by the same institution. Banks must retain proper documentation to confirm the source of funds for every payout. So this is the statement from the central bank. Now let's go on Zoom and speak to the CEO of the Ghana Association of Banks, John Ewa, to give us more insight. Now, from the side of the commercial banks, what would you say has led to this decision? Kindly unmute, please. Ewa.
Yes, I believe I'm okay now.
Great.
Can you hear me?
Yes, loud and clear. From the side of the commercial banks, what would you say led to this decision from the central bank?
Yes, the leadership of the banking industry had a meeting with the governor and his team a couple of days ago, I believe 2 days ago, on the 19th of this month, and at which meeting this matter was discussed. I must say that it received the support of the banks, because in our view, the significant cash withdrawal over the counter, we don't see the merit or the justification for such huge withdrawals. If you ask me as a banker that if someone came to a branch and withdrew $1 million, what possibly that company will be using the $1 million for, I will not be able to tell you. I can't pin my hand on anything that the dollar is going to do, apart from potentially going to fund some illicit activity that perhaps we do not have the evidence to support. So we are very much in the same boat with the Bank of Ghana, that our legal tender in this country is one currency, and that is the Ghana cedi. And our big corporations must learn to use the cedi in which they earn their revenue.
Some members are of the fear that this could potentially affect your operation. Is that the case?
If you ask me, this rather should help facilitate foreign currency transactions for those who really need the currency. If somebody is coming to your branch to withdraw $2 million, that one withdrawal is going to affect about hundreds of people who may need 5,000, 2,000, 10,000 for their basic maybe travel needs or other requirements that are backed by law. So we are very much in the view that this rather will help the banking industry to meet the needs of a large group of Ghanaians. In fact, the critical mass of people who really need the foreign currency. If you ask for my personal view, I would not even restrict this to large corporates. I think it should go from SME to every organization that calls itself a corporation.
Finally, do you still now have more dollars as the bank? And also, what should we expect going forward into the next week?
The point is, our currency is the cedi. The one we have control over is the cedi. We can never have enough dollars. We will always have dollars that, if we use it judiciously, can help us to meet critical needs. It is not, we do not need dollar for every basic need of the banking industry or the business community or even as a country. So yes, I wouldn't say that we have everything we want, but to the extent that the demand is lawful and legitimate, banking industry stand ready to provide the funding.
Sorry, I said last, but let me just chip in this. Is it likely that the banks have started dropping their interest rate as was expected due to the drop in monetary policy rate?
It is not even a likely event. It is something that has happened. The first Wednesday of this month, I've forgotten the exact date that fell. The Ghana reference rate came down from 23, upwards of 23 point something to 19.67. That immediately reduces the lending rate by almost 300 basis points. So it's not likely event, but it is an event that has already crystallized.
Thank you very much, Johnny Wall, for speaking to us on this development from the central bank. Now, let's still go on Zoom and speak to senior finance lecturer at the University of Ghana Business School, Dr. Benjamin Amwa, still on the central bank decision to halt key transactions above certain range in dollars. Now, do you think that the Bank of Ghana is getting too tough on these reforms that it has started implementing?
No, from my point of view, because this large body corporate deposited a certain amount of money into their account, dollars. So if you deposited, let's say, $100,000, why do you want to withdraw more than $100,000? You have a ceiling of $100,000 based on your own deposit. So the assumption is that if you want any withdrawal, that should be up to the $100,000. So Bank of Ghana is not being tough. Bank of Ghana is just, as at now, morally swaying the banks to do the right thing by coming out with this information. If going forward, these body corporates do not comply, then I believe the central bank will go ahead to penalize the will-be perpetrators of this act. But see, we also need to understand, why are they withdrawing hard currency over the counter? That is a question we need to ask. When we don't use dollars on our markets, dollars is for transfer. And if you want to effect anything in terms of international trade, you just apply to your bank. Your bank will then look for the dollar for you, or it's even assumed that because you deposited your dollars, you have dollars available, then they can use that to transfer the funds on your behalf. So the question is, why are they withdrawing the dollars on our local markets? Because we don't sell and we don't buy in dollars. Sorry, we don't buy in dollars. So why do you need the dollars? So it begs the question, why these large body corporates are doing that. Maybe there is something in there that is benefiting them. Hence, they will go for dollars out of Ghana cedis. And that is what the central bank is seeking to prevent.
Right. Now, I want to get from you, you've asked the why now, how the central bank is going by this policy implementation. Is it quite satisfactory from where you sit?
Yeah. Anything that will make the dollar unattractive in our domestic economic transactions is what the central bank must do. Our currency is Ghana cedis, and the Ghana cedis is more than able to be used to effect any form of economic transactions in Ghana, even beyond Ghana. So long as you are doing that through a bank, it should be possible for you to do that. We have our Visa card and our MasterCard. So long as you have money in your account, even if you travel with your Visa or MasterCard, you should be able to pay from your CD account. So the craze for hard currency dollars should be made unattractive by the central bank. The central bank is not being tough. The central bank is just doing what it has to do. And so long as they will go on to make the dollar unattractive, right, not only the dollar, any other currency apart from the Ghana cedi unattractive when it comes to economic transactions in Ghana, that should be good for all of us.
Interesting. What do you tell those who are worried that this could bring some pressure on the Ghana cedi?
It will not happen. Because if you are going to effect any international trade transaction, the banks are well and able to assist you to do that. It's as simple as that. So worry about what? The issue of the exchange rate is simply because you need to buy the dollar. Great. That is why the exchange rate will have to maybe increase or decrease depending on the supply and demand condition on the forex market. But as to the availability and the purpose for which you have to use the hard currency, it is solely when it has got to do with anything that is international. So they need not to be worried. What we need to do is to mop up the system and make sure that we have enough dollars in the bank to satisfy our forex need, but not for domestic transactions. So long as Bank of Ghana is doing that, we should be okay. And they need not to be worried.
All right. Thank you very much, Benjamin Amoah, for your insight here on the marketplace. Now, in other news, Fitch Ratings estimates that 6 banks operating in Ghana are unlikely to achieve capital compliance through internal capital generation alone. Therefore, they would need to seek capital injections merged with or be acquired by other capitalized banks or be granted extended period to meet the requirements. The following report has more.
Fitch Ratings pointed out that 2 of the banks that remain undercapitalized are government-owned and have already received capital injections. It said it expects the bank to receive further capital support to achieve capital compliance, although these may not materialize before end of 2025. Meanwhile, the banking sector's capital adequacy ratio, excluding the benefit of forbearance, was first disclosed by the Bank of Ghana at the end of February 2024 as 8.7%. It increased to 18.2% at the end of the first half of 2025. This indicated that the vast majority of banks will be comfortably compliant when the remaining 25% of the losses incurred on CD government bonds is phased into regulatory capital at the end of 2025.
Now, the Minerals Commission has announced that the duration of mining leases will now be capped at 15 years, down from the 30 years period provided in existing law. Chief Executive of the Commission, Martin Ayisi, made this revelation during an engagement on the overview of the mining regime in Ghana. My colleague Maxwell Aholotu has more in this report.
The Minerals Commission has outlined major reforms to Ghana's mining laws governing the registration and operation of mining firms. Among them is a new limit on the duration of mining leases. Chief Executive Officer Martin Ayisi explained that the 30-year leases have not benefited the nation, as companies often fail to undertake extensive exploration. He says this makes it necessary to restrict leases to a maximum of 15 years.
We've also realized that there is no need to give these 30-year leases. It's never helped us. I did a check around the world. I found an average between 21 to 30 years. most countries in Africa between 25 to 30. A lot of the laws in Africa countries were basically Ghana's law. A lot of countries copy from us. So we have decided that now the upper limit of mining leases should be 15 years.
He also revealed the abolition of development agreement, which granted some mining companies special terms beyond the standard leases. He explained that the state does not benefit from such agreement when economic conditions improve.
We have decided to now abolish development agreements. So all these issues of development agreements, investment agreements where countries are giving, some companies are giving some special arrangements, we're taking them from the law. Like the accounts will say, Amboye. So what are these DAs? Where apart from the standard mining leases each company has in Ghana, they are giving special terms. And the guys that they brought in billions. I'll tell you a few things. So for instance, what they forget is that, or what we do to ourselves is that when the economics change, we don't benefit.
Also speaking at the engagement was Dr. Charles Mensah, chairman of the board of the Institute of Economic Affairs. He said Ghana's frequent recourse to the International Monetary Fund stems from the country's failure to properly control its natural resources, which could otherwise finance the economy.
For the record, we have been to the IMF about 17 times asking for a bailout. In other words, we've gone bankrupt about 17 times over the past 40 years, let's put it that way. And here we are, we have a huge mining industry. We produce gold. We are told Ghana is the largest gold producing country, one of the largest, maybe the second in Africa. Yet, with all these natural resources, we keep going bankrupt. Why is that? Now, it is because we have no control over our natural resources. Our natural resources have all been given out to foreign companies who ship out the resources, and the revenues that are accrued to these resources are all banked outside. So as a result, we're being asked to run a race with our hands tied behind us.
The Minerals Commission is hopeful that the proposed reforms to mining laws will help properly indigenize the nation's resources for the full benefit of its citizens. Maxwell Aklobo to report, read to you.
That's all for business here on the marketplace. My name is Winston Taki. Now let's bring you updates on our website, myjoyonline/business. Stop foreign currency cash payment to large corporates without deposit. That's according to the main central bank. Now, we are committed to supporting the business community, the governor giving assurance to businesses. Ghanaian entrepreneurs seek further opportunities in Turkey to its biggest industry fair. Already, our president is in Japan, bringing more investment into the country. Thank you for watching today's edition of The Marketplace. My name is Winston Taki. Have a good business day, make the right decision, and succeed.